Our next presentation is on not-for-profit financial statements and the Form 990, compliance requirements or fundraising opportunities. And our presenter is Jim Freeze. He's a partner in our Brown Edwards office located in Harrisonburg. He specializes in working with employee benefit plans and not-for-profit organizations, including foundations, K-12 organizations, healthcare entities, community action agencies, and other social organizations. Jim has a wide range of experience in other industries, including manufacturing, utility companies, cooperatives, construction contractors, and physician practices. He is a member of the firm's peer review services team, providing quality reviews to regional public accounting firms across the country. Jim and I are co-leaders of the Brown Edwards not-for-profit niche, as well as co-founders of the Brown Edwards K-12 niche. Although you're seeing me as the moderator at the conference today, this conference was Jim's idea, and he put a lot of work into making it happen today, along with several others at Brown Edwards. So a big thank you goes out to Jim. So take it away, Jim.
Is that your way of just saying that if this thing's bad, it's my fault?
You got it.
All right. Well, hey, I just wanted to thank everybody for coming. Like Melissa said, we've worked on this thing for about 2 years now. COVID's thrown a wrench into this, like everything else, and we recognize that there are a lot of things that you could be doing with your time. We recognize that we all have a lot of demands on our time. You could be doing other things, and you chose to spend it here with us, and we don't take that for granted. So sincerely, we just want to thank you so much for being here. And one of the drawbacks to the virtual conference, I think, is it really does kind of impair some of that interactivity. I would much rather be there in person, where if you had a question, we could just kind of talk about it in the room. I would much rather have a discussion than a lecture. And so we'll do the best we can, but if you do have any questions or anything like that, please feel free to throw them into the questions box. And then Holly or Alexa, just feel free to interrupt me, and we can just talk about your question while it's top of mind, and not have to wait till the end. And hopefully that'll give us the illusion of some interactivity there. So I'm going to be talking about the Form 990 and your financial statements, and how most of us have to prepare these. Almost all of us would have to do the Form 990. Most of us probably have to do some form of financial statements, and they're required, right? The IRS makes you do the Form 990. You don't do it because you want to spend 50 hours filling out a form. So you're forced to do it. It's a compliance requirement. But this session's really on how to take those compliance requirements and really turn them into fundraising documents, and how can you essentially put your best self forward with those documents. So looking at a bit of an agenda, what the session is, I'm going to focus on some best practices using your financial statements and your 990. Again, from a public presentation standpoint, something that you would be proud to attach to a grant request, or something that your development person could easily sit down with a donor and go through. What the session is not is a how-to. I'm not here to teach you not-for-profit GAAP. I'm not here to go line by line telling you how to fill out a 990. Now, what we might do, just because the 990 is a pretty hefty form, and really it's not very intuitive, I might just do a super high level and kind of go page by page and just try to share a little bit about what is this part of the 990 trying to communicate. Again, I'm not going to go into the details of how to fill all that out, but I did maybe want to take some of the intimidation factor away. I'll probably spend most of our time on the Form 990 for a couple of reasons. The first, I kind of mentioned it a second ago, unless you're affiliated with a church, everybody in this meeting has to do a 990. Not everybody in this meeting would be required to do financial statements. So that's reason one. Reason two is that most of what we're talking about today is fairly common sense. type things, and most of the points I'm going to make really will translate from the 990 to the financial statements. But so I'll spend most of the time on the 990, and with the remaining time, really I'm going to focus on how to pull out some financial metrics out of your financial statement so you can kind of share those with your grantors and your donors. All right, moving on. This is a picture of a handsome devil. This slide says, hire Brown Edwards and all of your wildest dreams will come true. And this is a picture of J.R.R. Tolkien. So I am a nerd, if nothing else. And like all nerds, I do love Lord of the Rings. I love Tolkien's writings. And this is a quote of his that I've always liked. He said, hobbits love to read books filled with things they already know. And so a lot of what we're going to talk about today, you've probably heard at one time or another. We're not talking about any rocket science topics here. We're not going to break a whole lot of new ground, but I think these are some tips and tricks that people don't often think about until they're really called to their attention. You know, a lot of what we'll talk about today, when you step back and look at it, really is common sense. But it's a funny thing about common sense that it really only becomes common once you become aware of it. You know, I've gotten into woodworking again here recently, and it's just something I absolutely love doing. I'm not very good at it, but it's something I really enjoy. And as I'm trying to figure out how to do something new, you know, I'm watching training videos on YouTube or something, and so often I'll watch a video and I'm thinking, my goodness, I mean, why haven't I always been doing it that way? It makes so much sense. It's blatantly obvious. But until somebody showed me, I didn't really know it was an issue. So I'm thinking that might be some of the case here today, and I'm hoping that we'll get some value out of this. So just starting with the Form 990, kind of what do you need to know? And these are just some high-level items about the 990, and they all really boil down to requesting donations and requesting grants is a competitive process. And when I use the term donors here, I'm typically not referring to the individual who's going to give you 25 bucks in response to a mailer. I'm referring to larger donors that you really spend time cultivating a relationship with. And those donors who are charitably minded are becoming more sophisticated. You know, they want to know what their donation is going towards, what it's accomplishing. 990s are public information. People know about it. Most people, especially those that give large amounts of money, know there's a guidestar.org, know that they can just go online and for free pull down your last 3 years of 990s. And as everybody on this call knows, you have to attach that 990 to pretty much every grant application that you put in. And so all that kind of boils down to competition. And I did look up some statistics. So this is a 2020 statistic from the National Center for Charitable Statistics. And it turns out that at least as of 2020, there are 20% more not-for-profit organizations than there were 10 years ago. If you compare that to the private sector, private businesses, there's about 2% more private businesses than there was 10 years ago. So not-for-profit organizations are proliferating at about 10 times the rate of private industry. But the pool of donor dollars isn't increasing all that much. And so there is additional competition for limited resources. The other point I'll make about the 990 to always keep in mind is that the 990 is not a tax return. It's an information return. It provides the reader with information, kind of holistic information. So it does tell you a little bit about the financial health, but it also talks about the organization's governance, its operations, how well it fills its mission, what it got done with its programs. And you want to give attention to all of that. There's a lot of narrative in the Form 990. And typically an accountant is preparing it, and accountants typically aren't known for using flowery language. That's why we majored in accounting and not literature in college. And so that's just something to keep in mind. All right, so the basics. Here's where we get back to the common sense. And if it's on this slide, it means that I have indeed seen this issue before. Make sure your name is spelled right, right? That seems pretty obvious, but on more than one occasion, I have looked at somebody's 990 and seen that they've misspelled their name. And because most of these forms are prepared using a computer-based program, when you spell it wrong in box 1, you have spelled it wrong everywhere. Read it. Just ensure that you're using proper grammar. Ensure that the language you're using is compelling. The English language has one of the largest vocabularies of any language on earth, and use it. Take advantage of that, and just let it have some polish. And all this boils down to the fact that first impressions are really, really important. When I was writing this, I was thinking about my kids, and my kids, probably 90% of the TV that they did watch growing up was the Food Network, because my wife and I knew that's the one channel we could turn it on and not really care about what they were going to see or hear. So my kids love to cook. They love the Food Network. But the one lesson that every chef on that channel says time and time again is that you eat first with your eyes, right? If you get served a meal, it doesn't matter how good it tastes if it looks like slop. And I think the same lesson translates here. First impressions are really important. If on the surface your 990 looks bad, it has inconsistent fonts, missing information, blanks, misspelled name, that reader is going to assume that you take that same level of care with everything that you do. And so it doesn't matter how good your programs are, how good your mission is, how well it aligns with what that grant's purpose is. If they think you do things sloppily, it puts you at a disadvantage. So those are kind of the highlights. So what are we going to focus on today? And I thought at this point, hoping the technology works out, I'm going to start kind of flipping between my slides as well as the form, an actual Form 990, so that you can actually look at the form while we're talking about some of these items. And like I said, or I don't know if I said it or not, the 990 is a 12-page base form, and then you may need to attach up to 16 schedules to it. I'm not going to go over all of that. I'm going to focus on these 4 primary areas, because I think that one, I think they're areas that are important to donors and grantors, and 2, especially the first one, their program service accomplishments. I think that on the whole, the not-for-profit industry doesn't do a great job at completing that page. And let's see, and I think we'll go ahead before I jump out and do a polling question. Holly?
Okay, I'm going to launch that. So the polling question is, how well do you know your organization's 990? Your options are, I can quote it from memory. I know basically what's in it. I glance at it when the CPA prepares it, and what's a 990? So I'll give it several seconds here to get our votes in. Okay, I'll close the poll. And Jim, I'll share the results.
Okay.
All right, so our winner is, I know basically what's in it. We do have 18, that was 62%. We have 18, and I can quote it from memory. We have 12, I glance at it when the CPA prepares it. And then we have 7 that said, what's a 990?
All right, well, that's all right. So am I screen sharing again? I always get paranoid.
Yes,
of these things.
you're not
all right.
up.
So let's hop right on to the Form 990 itself and talk about a few things. And like I said, I thought sometimes an overview of just what the page is trying to communicate might be helpful. But we're really going to focus on page 2 here next. But page 1 of the Form 990 is designed just to give you a snapshot of the organization. Just at a glance, you know a little bit about who the organization is and what they do. So at the top, you have all of your demographic information, your name, address, exemption paragraph. And then you do get to share your mission or your significant activities with your reader. And so that's very important to give attention to, because again, it's the first thing we're going to see. And then the rest of this just tells a little bit about the size of the organization. How many employees do you have? How many volunteers do you have? And then there's some high-level financial information right in here. And every one of these numbers are actually pulled from a more detailed schedule in the back of the form. And so again, page 1 is there just for a snapshot. But again, you want that snapshot to give a good first impression. And we're going to spend our time here on page 2. And page 2, at the top, you would talk about your mission again. And again, you want that to be well thought out and well stated. But then you get to list up to 3 program service accomplishments. So this is the one time in all of taxation where the IRS lets you brag on yourself and doesn't charge you tax for it. But this is really where you get to share with your donors the reasons why you are worthy of their donor dollars. This is where you get to tell the grantor how their money is going to be used and what it's actually going to accomplish. And I said it before, but I'll say it again. This is, I think, one of the most important pages on the entire form. And by and large, it's one that's fairly poorly completed. Common errors that I see, or common issues that I see, rather, is just being overly succinct. I've seen, well, first I've seen it just not completed at all, but I've also seen where it's just a handful of words, 3 or 4 words. I've seen it where it just repeats the mission. I've seen it where it talks about what the organization does, but not what it actually got done and what it accomplished. And that's most of what I see. Most of what I see is really not taking advantage of the space that's given. That's probably about 90–95% of improvements I think could be made. The other 5 or 10% actually go in the other direction. I've worked with one client that actually gave me a 10-page single-spaced attachment to put on their 990 that went into excruciating detail about every little thing they did during the year. And a lot of work went into that, and I hated to tell them that nobody's going to read it. Right, wrong, or indifferent, we're a nation of headline readers now, social media post readers, and we don't have the attention spans we once did. But even on the other side, if I'm a grantor and it's a competitive situation and I have to review a bunch of these things, I'm not taking an hour to read all of that. And so my recommendation is to take advantage of the space that's given. Use compelling language and really talk about outcomes and what you accomplished and how that donor's money is going to be used. And again, I can't stress it enough how important I think this page is. And I think just to illustrate that a little bit, let's do an exercise. And again, I would love this to be interactive, but I'm just going to envision everybody on the call either nodding their head or shaking their head no. But the game here is we're going to do 3 mission statements. We're going to do 3 program service accomplishments. And the question is effective or ineffective. And again, it's not no trick questions here. It'll be pretty obvious. But these are all, every one of these examples was pulled from an actual 990. I think I got them from an academic article I read, but they all originated with a form that was actually filed with the IRS. So let's do 3 mission statements here. Again, effective or ineffective. Organization A's mission statement is see Schedule O. Is that effective or ineffective? And just in case you're not aware, Schedule O It's one of those 16 schedules that you may need to attach to your form, and it's essentially a blank piece of paper where any spillover narratives can land. But is that effective or ineffective? We say it's ineffective because it misses the opportunity to have your mission front and center. You don't want the reader to have to dig into the back of the form to figure out what it is that you do. All right. Mission statement 2, organization B's mission is to give financial support to cancer patients. Effective or ineffective? This one I just said, it was kind of meh. You know, it's a little bland. It's not compelling. Doesn't take great advantage of language or word choice, but it does describe what the organization does. I know when I look at page 1, I know what the mission of this organization is. And how about organization C? Effective or ineffective? So organization C's mission is to care for the homeless or those at risk of becoming homeless in our community through services that alleviate suffering, promote dignity, and instill self-sufficiency. And we can kind of see where the trend's going on these. And we said this one was effective. You know, it does tell what the organization does, and it's compelling language. All right, let's hop over to some program service accomplishments here. So again, effective or ineffective, and you can probably tell how the trend is going to go. But organization A's program service accomplishment is to provide funding for the basic needs of their clients and training for their volunteers. And we said that was ineffective because it wasn't an accomplishment. We don't know what they got done. We don't know how they used the resources or how effective they were at using the resources. It really just kind of restated the mission of the organization. So that would be considered an ineffective program service accomplishment. All right, organization B worked with over 90 participating community charities to provide funds for charitable activities through a matching program based on pledges obtained by charity volunteers. Again, this is the one in the middle, right? We said it was adequate. So, you know, it told us what the program was. They told us a little bit about how it worked. And we have a little bit of quantitative information so that we know kind of the size of the program. But again, what was done with those funds? What was accomplished? How is your mission further along than it was before these programs? And then the final one, organization C's program service accomplishment was that they provided meals to 50 partner organizations located throughout the area, where anyone who is hungry is fed. 3 million meals were served. They helped 50,000 people with clothing, and 6,000 at-risk children received new backpacks. Yep, and as you could guess, that one's effective, right? I mean, we know when I award them that grant, I know exactly where those funds are going and what they're going to be used for and what they're going to accomplish. So that was effective use of language. And I think before I do that polling question, I wanted to give you one more kind of caution, and this will apply primarily to your 2020, maybe your 2021, hopefully not your 2022 990s, and that is COVID, right? We're all dealing with it, and I can't tell you the number of 990s that I've looked at where their program service accomplishment is some form of, yeah, we went through COVID and it was really hard and we didn't get as much done, but you know, we persevered and made it through the other side. And while that may be factually accurate and true, it's also factually accurate and true for most other not-for-profit organizations out there. And so just saying something like that does not really set your organization apart. And just last week, one of my clients gave me their program service accomplishment, and I asked permission to brag on them because they said yes. And because I think the Boys and Girls Club of Harrisonburg just took this COVID question and kind of turned it on its head and really talked about how they could become more effective. And I just wanted to share that with you. And Jim Freeze deserves no credit whatsoever from this. It was written by their executive director, Sandra Quigg. And I just think she did such a fantastic job I wanted to share this with you as an example of how to kind of embrace the COVID question without sounding like what everybody else is putting on their 990s. And so they said that the Boys and Girls Club served over 67 weeks at 55 hours a week, which is 45% increase in their total hours over a non-COVID year. The club stepped up to support essential workers and their children, serving as academic support centers and providing emotional and social well-being to for members ages 5 to 18. So again, that tells us exactly COVID happened, and here's what they did about it. So we know what they did. But they go on further. Club kids reported higher grades and better emotional health than their non-club peers, with 97% stating that they felt the club provided caring and supportive adults. There's your outcomes, right? So here's the situation. Here's what we did about it, and here's our outcomes. That kids have higher grades, kids have better emotional health, and then they bring it full circle with their mission at the end. The financial support received by the club is a key element to ensuring those who need it most, or need us most, which is pulled right from their mission statement, are able to access academic, social, healthy, environmental club attendance delivers. And so I just thought they did a great job of really taking that question and embracing it. And I just wanted to share that with you. And let's do, so I think now, Holly, I'm up to a second poll question. So after hearing all that, how does my organization's program service accomplishments shape up? Are they a literary work of art? Charles Dickens would be jealous. Are they effective? Are they adequate? Or what's a PSA?
Okay, so I've launched the poll question for everyone to submit their answer. I think we do have a few literary works of art. All right, I'm going to give it just a few more seconds and I'll close the poll. Okay, and let me share the results. So our winner is 56% adequate, and then 31% effective, then 10% a literary work of art, and we had 4% that answered what's a PSA, sorry.
All right, well, that's good though. I mean, it does show that you guys are reading those and taking them seriously. So that's an encouraging result. All right, so I think I'm about halfway through my time, and that is really where I wanted to spend the bulk of my time. So let's spend a few minutes on some of these other topics, and then we'll hop over to the question of some financial statements. So the next 3 pages of the 990 I'm going to spend some time on are the governance questions. And so I guess the IRS redesigned the Form 990 back in 2007. And at that time, one of the IRS's concerns was that governance of not-for-profit organizations wasn't very good. We were in kind of the early mid-2000s. It seemed like every time that you opened up the paper, there was some other high-profile fraud or mismanagement of funds with a national organization. And the IRS believed that a part of the cause of that is that boards of directors weren't doing their jobs. And so they added a page to the 990 just dealing with board governance. And do you have good governance policies? What's your governance structure? And I will say that I think this is one of the few times in human history where the government saw a problem, implemented a proposed solution, and the solution actually worked without a lot of side effects. I've worked with not-for-profit organizations, since I got into public accounting about 20 years ago. And I can tell you that boards of directors now take their jobs more seriously than they used to. Anybody in Harrisonburg probably knows a man named Neil Menifee, who ran a large insurance agency here in town. but he was also on the board of directors of, it seemed like, every organization in Harrisonburg at one time or another. And he introduced me to the term coffee and donut board. You know, where your board meeting, you came in, you got your coffee, you got your donut, you listened to management talk for 20 minutes, and then you went home. It's really not that way anymore. Most boards I work with, the members are engaged. They realize they've taken on fiduciary responsibility. And so I really do think that the IRS accomplished what they wanted to with this. And we'll look at that page in just a second, but I'll hit the next couple of slides and then hop over to the 990. The next page we'll talk about is officers' compensation. And one of the reasons that you really do want to be aware of what's in the 990 is that your names are in it. So if you're a board member, if you're as an executive director, or a chief financial officer, or equivalent, your names are in it. So if there's ever, and thank goodness, I've only had to deal with this a couple of times in my career, but in those few instances where your name, the organization's name, is in the paper in a negative light, you will be getting a phone call from the local paper. You will be getting a phone call from the local TV station. And so it really does behoove you to know what's in the form. And also, if you are compensated, your compensation is in the form. And so we're going to talk about the implications of that as well. And then the last thing we'll talk about is page 10 on functional expenses. And on this page, we're really going to talk about one accounting ratio that is pulled from this page. So let's hop back over to our Form 990 here, and let's just work our way through it. So pages 3 and 4 are just 40 question list of items that ask about activities that your organization may or may not engage in. And depending on how you answer these questions, that's what dictates which of those 16 schedules you may need to complete. So that's really the primary purpose for pages 3 and 4. Page 5 deals with IRS compliance, and it really is just asking, are you filing everything that you need to be filing with the IRS? And here's page 6, where we'll spend just a minute. And I talked a little bit about this, kind of the point of the page. The top section, I won't spend any time on it, but that really talks about the structure of your governance. You know, are you run by a board of directors or members or stockholders? Do you take minutes of those meetings, and does your board committees take minutes? So part A really talks about the structure. Part B is a listing of board policies that the IRS thinks are important for good governance. And it's simple things like, do you have a whistleblower policy? Do you have a document retention policy? Do you have a conflict of interest policy? If you do have a conflict of interest policy, are you following it? And then an important one that will dovetail with the next page is, do you have a process for determining what your executive director and other key employees are making, and how is their salary determined? And so there's no compliance issue with marking all of these questions no. You know, the IRS isn't going to come after you if you mark every single one of these things no. But if you do have these policies, you want to take credit for them. And again, in a competitive grant situation, I don't know that there's ever been a time when a donor came in and said, well, hey, I wasn't going to give money, but they've got a whistleblower policy, and so yeah, here's my donor dollar. But in like a competitive grant situation, if all else is equal, and that grantor is trying to decide between organization A and organization B, and it looks like organization A has good governance and B has no governance, you know, you feel better giving to the organization that's better run. You just feel like they're going to be better stewards of your resources. And so many times when I meet with a new organization, anytime I meet with a new organization I've not met before, I bring a copy of last year's 990 and kind of walk through it with them. And many times I'll come to this page and everything will be marked no, and I say, hey, you know, you may want to meet with the board and really consider kind of some board governance policies, and that executive director or director of finance will take one look at it and say, well, I don't get it. I mean, we've got a lot of these policies. I don't know why they're marked no. And, you know, I mean, they're marked no because you've never read the form, probably. But so just read it, know what's on it, and take credit for the policies you do have. And if you do have things that are in truth marked no, meet with the board and consider whether it would be prudent to adopt additional governance policies. All right, so let's go to page 7. And again, I said a lot of what I wanted to say on the previous slide, but it's important, again, just to reiterate, because your names are in it, and so is your compensation. And I did want to say that there is nothing wrong, there is nothing inappropriate with paying your people well. There's nothing at all wrong with someone having a high salary, assuming they merit that salary. But if you're going to have a situation like that, let's kick it back to page 6. Does the board have a process for determining what that salary is? I have worked with, or I've not personally worked with, I've heard a number of stories where somebody got upset with something, looked at the 990, and saw how much that executive director made, and they made a big stink about it, and it got into the paper, and it was a kind of a public relations nightmare. And in those cases, it's much better if, when you, the board member, get that phone call from the paper about why your executive director makes that much, it's much better to be in a position where you can say, well, we had a committee that got together and they pulled some salary studies and statistics from across the country of like organizations at the same size, and we have a formal evaluation process, and based on all those factors, that's how we set the salary. That is much better than you being asked the question why your executive director makes that much, and your response is they make what? And again, I've seen those things happen. So the cautionary tale is it's to know why the number is what it is. But again, there's nothing wrong with paying your people what they're worth. All right, that's pages 7 and 8. And so page 9 is where we finally start with accounting information. And I talked a bit ago about how the 990 is an information return, and it's designed to give holistic information about the organization. And I think one of the ways that's demonstrated is that we're all the way to page 9 of 12, and this is really the first accounting information that we've seen. And so I'm not going to spend any time here, but this is where you break out your revenue. And so you're going to talk about how much you got in contributions and from what sources. Your program service revenue, if you provide services in exchange for compensation, there's a list for it. And then the bottom half of the page is pretty much everything else. It's usually your investment return, if you have any rental income or anything like that, sales of inventory. But that's all page 12 does. It just breaks out your revenue. Page 10 is where we're going to spend the last bit of time on the 990 before moving on to the financial statements. And again, page 10 is similar to page 9 in that you break out your expenses into a whole lot of categories. And anytime a not-for-profit organization incurs an expense, they've got to categorize it in one of 3 buckets. Either it's a program expense, meaning it goes directly to further your programs, to further your mission, or it's a fundraising expense. It's costs you incur for development to raise those funds. Or if it's not column B and it's not column D, but it is then considered column C, management in general. And those tend to be kind of your general overhead, your back office type expenses. And so one of the most widely used metrics of how well an organization utilizes its resources is called the program ratio. And that's where you just take the total of column B and divide it by the total of column A. And so it says how much out of every dollar that you spend is going to further your mission, is going to further your programs. And a higher percentage tends to be better. A 75% is kind of, in my own mind, what I like to make a floor, just because I know there are a number of grantors out there that won't touch you if that program ratio is under 75%. I think 80% is good. You know, if you're up in the 90s, that's great. If you're too high, you know, that could mean that you know, there's some question into how you're allocating expenses. And so when you run your program ratio, if you look at that and you see it's lower than it should be, that can mean probably one of two things. One, it can mean that you're not really effectively using your resources. That's what a reader of the 990 is going to think, is that you're not using those things really well. But the other thing could be it may just be time to reevaluate how you're allocating those expenses. Executive director, how are you spending your time? You know, maybe we're allocating it 25% to program, 50% to management in general, and 25% to fundraising. Well, let's reevaluate that and ask, is that appropriate and is that accurate? The only real guidance that you're given, either in the accounting literature or in the 990 instructions, is that the methodology should be consistently applied and based on or rationally applied and consistent from year to year. But you are allowed to reevaluate that. And just wanted to highlight that as something that grantors and donors really do pay attention to. And that's about it. That's about it for the Form 990. Page 11 is your balance sheet, and that's pretty much going to mirror the balance sheet of your financial statements. And page 12 is going to be your just a few reconciliations and a couple of final questions. All right. All right, so let's do the poll question first, and then I'll back up a slide. So the poll question is, so now we're switching gears with the last 15-20 minutes of our session, and we're going to chat about your financial statements and how donors can use those. So if you have, so the poll question is, what level of service do you have on your financial statements? Do you hire a CPA to do an audit, a review, a compilation, or you don't have any externally prepared financial statements?
Okay, I've launched the poll question. See a blue screen. You can submit your vote on the question. And Jim, we had some questions come through, so
sure.
I'm going to go ahead and relay those over. One question is, I know the IRS has been requiring the 990 to be done electronically. However, not all are required if they don't do more than 250 returns in a year, correct? If you need me to repeat that, I will.
I believe that is correct. It's been a while since I've looked at that particular rule, but that I do know that 250 returns was everything, like your 1099s, your W-2s, your quarterly payroll filings. I mean, it's every single piece of paper that goes to the IRS. But I believe that is still correct.
Okay. And then we really need to train, this was a comment, I think, really need to train donors away from focusing on program ratios. Smaller overhead doesn't equal impact. That was just a comment made. And then a question on how do you calculate your program ratio? I'm looking at our last 990 and trying to understand where that is.
Okay, yeah, I can show that real quick. Am I sharing a screen or is the poll still up?
I have not shared the results, so you're still sharing your screen.
Okay, let's see. All right, so here's, again, page 10 is your expense statement, and it's got the various columns we talked about, and then all the different natural categories of expenses. So, you know, salaries, taxes, professional fees, and then you've got your total down here. So to calculate the program ratio from the 990, it's gonna be B25 divided by A25.
Okay.
Did that answer the question?
That was from Mary Hughes. Hopefully that answered her question. Mary, let us know if it did not. Oh, yep, she said perfect. So we're good there. I'll go ahead and share the poll results. So for what level of service you have on your financial statements, we have 72% have an audit. Then the next one was 16% other or none. Then review was only 7% and compilation was 5%. But then there was a note, Margaret Clayton noted that she answered audit, but it's only every 3 years as required. They're a small private Christian school.
Okay. All right.
All right. So you're back up.
All right. Fantastic. I appreciate all the questions. I really do. So keep those coming. So let's move our attention to the financial statements here. So we're going to talk about a couple of things. We're going to look at different users of your financial statements and kind of what donors are looking for. And then we're going to talk about some differences from the 990, because depending on which document that you use, you might get some different answers. And because I'm an accountant and I absolutely love it, we're going to dig into some accounting ratios, and that's where I'll spend the bulk of the time in this session. The bulk of the time will be spent with just how you can pull out certain numbers from those financial statements to better tell your organization's story. And I'm going to go over a little tool that I use when I'm meeting with my boards of directors and just going over their numbers. I just find it makes it a little more interesting if I'm talking about how the numbers interplay with each other than if I'm just saying, you know, cash is up from last year because you made more money. I tend to bore myself when I talk like that. So that's our goal. So let's talk about users of the financial statements. And the same could be true for the 990 as well. But anytime you have outward-facing financial statements, there's a number of potential users, and all of these users may have different needs or want different information. We spent most of our time today talking about donors and what they like to see. Again, they're concerned with program effectiveness and you know what you're going to do with their funding. The board of directors needs to manage the organization, so they need information that's going to help them to make operational decisions. You know, governments, if you are government funded, they're going to want to know, are you complying with the requirements of our grants? And, you know, the bank certainly wants to know if you can repay the loan. And so you kind of, as you're preparing these or having them prepared, you want to be aware of who is going to be using these things and what are their needs. But refocusing on just donors for a moment, you know, here's our common sense thing again, and many of these are similar to what we read earlier. But, you know, read your statements. Don't just, I guess 72% of people had audits. So actually review that draft when the auditor sends it to you and make sure that it's correct before you sign that rep letter and send it back to the CPA. So just read them, know what's in there, you know, ensure that they look pretty, they're formatted properly. You know, you don't want to have columns misaligned, misspellings, financial statements that don't add up properly. Cut off sentences. And then the last point on here is that you want to be sure that they're technically correct. And kind of accounting standards or public accounting kind of goes in these phases where, you know, things will be fairly calm and not a whole lot of changes year to year. And then the standard setters will get all hopped up and it seems like every single year there are wholesale changes that we have to implement in the financial statements. And we're in the middle of one of those right now. So in the last 3 or 4 years, you know, we've had the new not-for-profit reporting standard.
No matter what is going on in the world.
Changed a lot of the look and feel of your financial statements. We've had the revenue recognition standard come effective this last year, which while it typically didn't change much in the way of numbers, almost always would add 3 or 4 pages of disclosures to the notes to your financial statements. We've had a new standard on contributions and how to classify those. So some things that last year you might have recognized as a contribution, you would not recognize as a contribution this year. And then in the next year or two, there's the new lease standard, which again has the potential to add a lot of disclosure and change some accounting. So we're in one of these phases where every time we turn around, there are big changes being made to our financial statements. And a knowledgeable user is going to know, a knowledgeable reader will know what standards should be effective. And so if they flip it open and you know, you ignored the not-for-profit reporting standard that came out 3 or 4 years ago, that's going to be a red flag that you're not keeping up. So if you're not complying with the latest standards, can they really trust the numbers that are in there? So just what I would encourage you to do would just be to make sure that they're technically correct and contain contained all of the latest accounting standards. All right, so I guess this is my last slide, and I was going to go over with you kind of a spreadsheet that I've come up with that I go over with a lot of my clients. And again, I just find that it really helps to generate some good discussion. I used to do something, or I call this my rustic presentation. You know, it's pretty bare bones, but I used to do, you know, kind of pretty PowerPoints with graphs and things like that. And what I found was that it turned into a lecture and people just stared at the screen. When I switched gears and went to something a little simpler, where it's just numbers pulled straight from the face of your financial statements, but maybe looked at in a little bit different way, boards of directors lit up, and we'd really have some good discussions. And so I wanted to share just a few of the ratios from this spreadsheet with you, just things that when you're applying for that grant, you may want to call out, or if your development person is sitting with a major donor, you know, he may want to discuss. And so I'm just going to look at 2 of them on this page and maybe 2 or 3 on the next page. Page 1 of my spreadsheet all deals with ratios that are pulled from your balance sheet, and they're all geared towards looking at the financial stability of your organization as well as liquidity. And probably the most widely used measure of liquidity is your current ratio, which is your current assets. Your current assets are cash and everything that's going to turn into cash within a year, divided by your current liabilities, which is everything that you owe at year end, which is going to come due within a year. And you want a ratio of at least 1 to 1, because if it's less than 1 to 1, really that means you don't have enough money to pay your bills, or it could mean you don't have enough money to pay your bills. So at least 1 to 1 is what you want. 2 to 1, I would consider good. This organization has a ratio of 1.3, which is pretty comparable to prior year. And this is an actual client of mine. I think I've scrubbed all their names off of it, but so these are real numbers. And for this organization, I know that they have other funds set aside. I know that they have lines of credit that they could tap into. So I'm not at all concerned with that 1.32. That's more than adequate for them. Days cash on hand tells a similar story. And that's designed to say if revenue stopped coming in the door today, or if cash stopped coming in the door today, how long would we last until we ran out of money? And you know, there's a target on this spreadsheet, but really that target's got to be set by the organization. Organizations will have different risk tolerances. Other different organizations will have different expectations of when cash receipts are going to come in. A hospital has a pretty good expectation of getting cash receipts every day. And so they may well be content with a little bit lower days cash on hand because they know that there's a revenue stream coming in. If you're an organization that's funded 100% from a federal grant that gives you 4 deposits a year, then all of a sudden I'd be more comfortable with a higher number. and 3 months may not be enough. But no matter which way you slice it, for this particular organization, they've got almost half a year of cash on hand, and that's solid by any measure. The next tab of my spreadsheet goes over income, or goes over ratios that are all pulled from the income statement. And I've split it into 3 sections, and I'm only going to go over the bottom one. But the top section really just deals with the sources of your income. And it's asking, do we have any concentration risk? Are all of our eggs in one basket? And it's just looking at that question from several different perspectives. The second section deals with your people cost and how much of our total expenses are we paying in terms of salaries, and how much are we paying in benefits to our people. And these are ratios that are really valuable to track over time and to look at trends. And the final section tend to be ratios that are just very specific to not-for-profit organizations. And we've talked about the program ratio already. But what I wanted to bring up here is that your financial statements may give you a different program ratio than your Form 990. And the reason is because they account for donated facilities and donated services differently. In your GAAP basis financial statements, any donated facilities, you use your location for free. Somebody just gives that space to you. For the financial statements, that's an in-kind gift. You record contribution revenue, and you also record some sort of facilities expense. And so it nets to 0, but you've got revenue and expenses recorded. And if it's your primary operating facility, that generally will be a program expense. On the 990, we are required to not record donated services and donated facilities. So in that example, if you have your primary operational facility donated to you, then your 990 is going to give you a much lower program ratio than your financial statements. And so I say all this just for awareness sake. If you're applying for a grant, you've got to put that ratio on there. Be aware of which one you're pulling it from, and if one looks low, have a good reason for that. The next ratio is fundraising efficiency, and that really is designed to tell you for every dollar that you spend in fundraising, how much are you raising? And in this case, the organization is only raising $1.25 for every dollar that they spend in fundraising. And as a ratio stands, that looks a little low. You want probably, like at a minimum, $3, $4, $5. If you're getting up to $8, $9, $10, that's considered really good. But what are the implications? It could be a couple of different things. It could be that our fundraising department's not doing a real good job. That's certainly a possibility. But the other possibility might be, are we allocating our costs properly? Maybe the executive director isn't spending 75% of their time in fundraising. Maybe they are spending more of their time in the program area. And so as a first step, if this were my organization, my first step would be to dig a little deeper and find out how are we allocating costs to that fundraising category, and seeing if those are accurate. And if they are accurate, then you really do need to start evaluating, that fundraising function and how good a job it's doing. And then the final item I'll call out, and I think we're pretty good on time, is cost per unit of service. And again, this is just something good to be able to share with grantors or donors. In this case, I believe this is a private school maybe, and they have 882 students. So in their case, it costs about $27,000 to educate a student. And that's good information for donors to know. That's good information for others to know. If you are an organization that would have more than one program, then you really want to run this ratio on a program by program basis. You know, if you've got a high cost program and a low cost program, just pulling the flat numbers from your financial statements really kind of muddy the waters. It really is better to kind of parse it out so that you know the cost. And that is just information that you can share with others.